Right, I want to talk you through something that's been bothering me a bit this week because on the surface, the market looks like it's starting to break out again. Bitcoin's holding up, it's pushing higher, and if you're just looking at the charts, it feels like we could be moving into a stronger phase. And I completely get why people are starting to feel more confident because visually, it looks like things are lining up. But the more I've been digging into what's actually happening underneath this move, the more I found myself hesitating because the data doesn't quite match the price action, and when that happens, it's usually worth paying attention. Before we get into this properly, if you're new here, my name's Paula, and on this channel, we break down what's really happening across crypto, macro, and global markets, not just the headlines, but how everything connects underneath. Because once you understand that bigger picture, you stop reacting emotionally to every move and you start seeing what's actually driving it. Now, the narrative right now is very simple. Bitcoin is strong, the market is recovering, and institutions are buying. That's the story you'll hear almost everywhere. But when you actually break that down and look at the specific data behind it, it starts to feel a bit less clear. Because one of the biggest signals we usually rely on to confirm institutional demand is ETF flows. And recently, those haven't been particularly strong. In fact, we've seen periods of outflows, which means that through one of the main institutional channels, demand hasn't been as aggressive as you might expect in a clean breakout environment. At the same time, if you look at trading activity, there have been moments where selling pressure has been quite heavy. We've seen negative net taker flow on major exchanges, which basically means that aggressive sellers have been dominating over buyers. Under normal circumstances, that kind of activity would push price down, or at the very least, stop it from moving higher so easily. But that's not what we've seen. Instead, Bitcoin has held up, and in some cases, continued to move higher, which is where things start to feel a bit unusual. And this is where the story shifts because when price and data don't align, you have to ask what's filling the gap. What is actually supporting this move if the usual signals aren't fully there? And one of the answers that keeps coming up is strategy, formerly MicroStrategy. Now, this isn't speculation, this is confirmed. Strategy has been one of the most consistent large buyers of Bitcoin in the market, holding over 800,000 BTC and continuing to add to that position over time. What makes this important isn't just the size of their holdings, it's the way they buy. They're not trading on short term sentiment. They're raising capital through equity and financial instruments and then using that capital to purchase Bitcoin. So effectively, they've created a system where external money flows into the company and then flows directly into Bitcoin. And as long as that system is working, it creates a consistent source of demand in the market. Now, I want to be really clear here because this is where people can misinterpret things. This does not mean one company is controlling Bitcoin. Bitcoin is far too large and too widely held for that to be the case. But markets don't move based on total size, they move based on the balance between buyers and sellers at any given moment. So, if one of the biggest buyers is consistently stepping in and absorbing supply, that can have a meaningful impact on price, especially in a market where other forms of demand aren't fully aligned. And this is where it starts to connect with the bigger picture. Because if you zoom out beyond crypto, you can see that the entire market feels a bit split right now. Stocks are pushing higher, acting as if things are going to improve, almost pricing in a more optimistic outcome around growth and geopolitics. Oil, on the other hand, is reacting to risk, still sensitive to supply concerns and tension. Gold is seeing demand as a hedge, reflecting uncertainty. And crypto is sitting somewhere in the middle, trying to move higher, but without the kind of clean confirmation you would expect if everything was aligned. So you've got this situation where Bitcoin is holding up, even though some of the underlying signals are weak or conflicting. And at the same time, there's a very specific source of demand that could be helping to support that price. And that's where I start to get cautious. Not because I think everything is about to collapse, but because when something doesn't feel fully supportive, you have to consider what happens if the conditions change. Because the real risk here isn't that strategy suddenly fails or stops completely. The real risk is much more subtle than that. It's about what happens if they slow down. Their ability to keep buying depends on their ability to keep raising capital, and that depends on market conditions, investor appetite, and confidence. If any of those things shift even slightly, the pace of buying can shift, and markets are very sensitive to changes in behaviour, not just absolute levels. At the same time, there is a bullish side to this that shouldn't be ignored. The fact that there is a structured, repeatable source of demand in the market is a positive because it means there is support that isn't purely based on sentiment. As long as that demand continues, it can absorb selling pressure and help maintain stability. But for this to turn into a clean, sustainable move higher, you would ideally want to see alignment. You'd want to see ETFs turning back to inflows, stronger volume, broader participation, and confirmation across different parts of the market. And that's really the key point for me. This doesn't feel like a clean breakout. It feels like a market that's being supported while it tries to figure itself out. And that's a very different environment to trade and to think about because it means that you can get moves that look strong on the surface but don't have the same foundation underneath them. Before I wrap this up, I want to leave you with one really important thought, especially in a market like this. When everything feels uncertain, when narratives are shifting quickly, and when the market is moving ahead of reality, this is exactly when you need to be the most intentional with how you protect what you've already built. Because it's easy to focus on entries, exits, and opportunities. But long term success in this space isn't just about making money, it's about keeping it. And that brings me on to something I think is genuinely important right now. If you're holding crypto, especially through a phase like this, when we're dealing with macro uncertainty, geopolitical risk, and sudden market shifts, you need to be thinking about security as much as strategy. Because the reality is, exchanges can go down, platforms can freeze, and during volatile periods, access to your assets becomes just as important as the assets themselves. This is why I personally like using Tangent wallets. They're simple, they're secure, and they remove a lot of the friction that usually comes with cold storage. You don't have C phrases written down in multiple places. You don't have complicated setups. It's just a clean way to actually take control of your crypto and keep it safe, especially during uncertain times like this. And if you're thinking about getting one, you can use my discount code Paula at checkout, which gives you an extra 10% off of any discounts already on the site. I've left the link in the description so you can check it out in your own time. Now, zooming back out, this is what I want you to take away from today. Bitcoin might look strong on the surface, but the underlying data doesn't fully support that strength in the way you would normally expect. And when price and data start to diverge, that's when you need to slow down, pay attention, and ask better questions. Because the real question right now isn't just whether Bitcoin is going up or down, it's actually what's driving this move and how sustainable that driver really is. If you got value from this, make sure you like, subscribe, and let me know in the comments. Do you trust this move? Or does it feel a bit off to you as well? Because honestly, this is one of those moments where what's happening underneath the surface might matter more than what you're seeing on the chart. Thank you so much for watching, and I'll see you in the next one.